Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're discussing limited partners and self-employment tax and some recent cases on this issue. We've covered this topic in past issues of Spiedel's Federal Tax Letter, a monthly newsletter, plus a searchable online archive of back issues that keeps you at the leading edge of the federal tax issues that impact your clients. You can get more details and subscribe at spiedel.com under Publications. A recent Fifth Circuit appeal is heating up the issue of when limited partners are subject to self-employment tax. The general rule is that partners are subject to self-employment tax on income received from the partnership for guaranteed payments for services and for the partner's distributive share of partnership net income. There are exceptions to this general rule, one of which provides that a limited partner's share of the partnership's distributive net income is not subject to self-employment tax. In 2023, the tax court heard the Soroban Capital Partners case on this issue and held that limited partners are subject to self-employment tax where they are a limited partner in name only, as determined by the functions and roles of the limited partner. The taxpayer in Soroban was a limited partnership whose limited partners received a combination of guaranteed payments for services rendered to the partnership and a distributive share of partnership net income, generally Schedule K-1, Line 1 income. The partnership reported that the guaranteed payments paid to the limited partners were subject to self-employment tax, but their distributive share of the partnership's net income was not subject to self-employment tax. After audit, the IRS determined that the Schedule K-1, Line 1 income for the limited partners should also be subject to self-employment tax because the limited partners were limited partners in name only. The taxpayer argued that a limited partner under state law, meaning a partner who is defined as a limited partner under the laws of the state where the limited partnership was organized, automatically meets the limited partner exception. But the tax court's analysis focused on one phrase of the limited partnership exception that says that the exception applies to a, quote, limited partner as such, end quote. The IRS's argument, which the tax court agreed with, was that the limited partner exception only applies where the limited partner's earnings are of an investment nature. According to the IRS, this was the purpose of the qualifier as such in IRC Section 1402, and that qualifier was added in 1977 to essentially exclude earnings that are of an investment nature due to concern at the time regarding the use of limited partnership investments to obtain Social Security benefits. To determine whether earnings allocated to a limited partner are of an investment nature requires a factual inquiry into the functions and roles of the limited partner. The tax court refers to this factual inquiry as the functional analysis test. Now, a different taxpayer, Sirius Solutions, has filed an appeal in the Fifth Circuit challenging the Soroban ruling. While the taxpayer in the Sirius case disagrees with the tax court's ruling in the Soroban case, it conceded that the functional analysis test would not qualify its partners as limited partners. Sirius requested in its tax court case that a decision be made in the IRS's favor, which allowed it to proceed with an appeal to the Fifth Circuit. This would make Sirius the first taxpayer to challenge the functional analysis test. Soroban has not yet appealed its case to the Second Circuit. Attend Spiedel's Federal Tax Update webinar on January 9th and 10th and get updated on everything that happened during the year to be ready for filing season. See a list of topics covered and get registered at spiedel.com under webinars. That's all for this week. Join us next time for another episode of Spiedel's Federal Tax Minute.